webcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Good morning. Thank you for joining us today for another webinar. Today's topic is the second quarter 2022 Global Cement Trade Prices Report. So on this next slide, we have the presenters, which is presenters include Prashant Singh, myself, and my colleague, Mr. Vanderson Teixeira, who is a business analyst at our Lisbon office. And we will be guiding you through today's proceedings. I'll be focusing more on the macro aspect, while Vanderson, who is the report expert, will be focusing on the trade dynamics for this report. So to start you off with a brief agenda, we will introduce our company for those who are not aware of us, and then we will delve straight into the highlights of this report, including the overview and methodology, giving you a quick glimpse of the macroeconomic environment that we are presently in, and how the shipping and energy prices are impacting the price outlook for this for these products. And then Wanderson will be sharing with you some tidbits about the domestic pricing and how the trade pricing outlook is expected to fare before sharing closing remarks. So a little bit about our company. We are divided into three different verticals: the advisory branch, the research branch, and the media branch. Under the advisory branch, CW works with major global consultancies and leading institutions, including the World Bank and other funds on different products. We also provide consulting and advisory expertise on a diverse product portfolio. For example, a recent sample of our advisory projects included a detailed study on circular economy and sustainability for the Middle East and North Africa, as well as the West Africa regions. And also another example of our diverse capabilities includes a complete business process analysis for an online art gallery website. Under the research umbrella, CW focuses on global cement demand, for which we are well known for, as well as detailed country and industry reports. We provide historical as well as forecast data for markets for a 5-year time period. And one of our main projects, which is the TPR, is complemented by our main product, which is the volume forecast report. So the volume forecast report obviously talks about volumes and production capacities, while the trade prices report gives you an understanding of how the products are being traded across the different quarters of the year. We also provide commodity price assessments for cement, clinker, as well as petcoke and coal. Last but not least, under our media umbrella, you have access to our online database. You can subscribe to various newsletters of interest, including cement, building materials, paper and pulp, petcoke, bulk products, and coal. And another aspect of the media branch, which we are starting to reinvigorate after the 2 years of the pandemic, are in-country and industry-specific meetings. Our next meeting, which is planned, is the CW America Summit in 2022, focusing on cement strategy, finance, and trade, and it's scheduled to take place in New York on the 21st and 22nd of September this year. So if you're interested, please don't hesitate to contact us for more information. Our contact details are included in the presentation slide. So without much further ado, let us please dive into the next report. And what this report, what does it include? Well, we include the second quarter update, which is basically a very important update because it includes a statistical update, which is done in the second and fourth quarters of the year. As you're all aware, this year and this quarter has seen unprecedented events happening in terms of rising costs and, of course, geopolitical events, which is impacting the energy and market scenario that we are seeing. And if you listen to some wise voices, will be impacting us at least into late 2023. This quarterly report provides a comprehensive quantitative and qualitative analysis on the trade of the various cementitious products, including cement, clinker, and slag. It is our endeavor, and white cement as well. It's our endeavor to always continue to expand the coverage of prices, especially in Africa. But given the volatility and given the reliability of information, and these days, it's we do that very, very slowly because the accuracy of the information is integral to not compromising the data set that we continuously have. This current report covers almost 86% of all the global trade for these products, and other details you can find regarding the individual and corporate subscriptions are provided in the link below on the slide. So as you can see from that slide, our coverage extends across the world, with Africa being the spot where you see major gaps. But again, this is predominantly due to lack of reliable and sustainable data sources. But we are continuously trying to increase this coverage at a country at a time if we can find a reliable source. For most countries, we have the entire data set for the trade prices. So now let's delve into the macroeconomic view and where we find ourselves. So just a few months ago, at the beginning of January, the outlook as given by the World IMF was much more rosy. Quite frankly, even in their April update, their expectations of where global growth was heading, despite the Russia-Ukraine conflict, was still much better than it is currently. As of now, the IMF is expecting to provide a new update, and in this new update, they are bound. They have stated categorically that they are going to revise global economic outlook for 2022 and 2023 downwards for almost all regions, which is not a surprise if you're looking at the news that you constantly get in terms of inflation at unprecedented levels. In America, it's at 4 decades high. Last time it was seen at such a level was 1981. Levels of inflation in Turkey and other regional countries are making major impacts on purchasing power and impacting the industry's ability to sort of absorb these tremendous increases in energy costs and prices. The outlook for Russia, despite sort of what currently seems to be a resilient Russian economy, uh, is that over the long term, there should be a significant wealth erosion. For Ukraine, and this is not a theoretical concept, for Ukraine, GDP erosion is estimated at a minimum of 30% this year. Um, who knows what the actual number will be once the hostilities sort of come to an end. Um, the World Bank, which is usually more conservative than the IMF, already expects a significant downgrade to global economic outlook to, somewhere within the high 2.5 to between 2.5 to 3%, significantly down from the 3.6% they had. So almost all the major banks have a negative outlook. Some investment banks in the United States are quite, shall we say, high on the prospect of a recession, especially in the United States. And based on a new JP Morgan report that came out very recently, should Russia go ahead with its threat to cut down oil production, we might see oil prices jump to anywhere between $190 a barrel to $380 a barrel. Needless to say, how catastrophic that would be for the world economy is quite obvious, even at the elevated levels that we find crude prices to be currently. Of course, this challenge is nowhere more visibly felt than in Western Europe, which has been very reliant on Russian energy supplies. And this winter is going to be an extremely challenging winter for Europe as it sorts to sort of realign its supply chains in terms of energy supplies. But the rest of the world is, of course, also facing problems as a result of the conflict, and there is no short-term prospect where we see oil prices coming down before 2024. So as we look at the current scenario and we look at what geopolitical events are sort of affecting us, there's three main events that you look on the world. You have the Russia-Ukraine conflict, which is now in a prolonged state of confrontation. Most observers, and quite frankly, most pundits did not predict that it would have taken this long for this conflict to drag on. But now it seems that Russia is set on, or should I say Vladimir Putin, President Putin is set on to extend this war almost like a war of attrition. And this is going to significantly impact, of course, the global economy, but especially European economies, because they are almost, I should not say energy blackmail, but that's where they find themselves to be in when it comes to their energy supplies from Russia. And the devastation in Ukraine, if you were to believe other reports, I think independent assessments say that this could require almost $1 trillion worth of investments over a significant period of time to sort of make up for what has occurred. So you can almost imagine that the sums that we are talking about are significant and will take decades to sort of repay, and their impacts will be felt on higher costs going forward. Meanwhile, in Asia, China continues to sort of aggressively contest Taiwanese airspace. There are sort of increased fears over the past few months and over the past few weeks of sustained Chinese aircraft and naval incursions into Taiwanese territorial waters. One, we don't know whether they're basically testing the resolve of the world as the conflict in Ukraine is going on, but this is going to be a cause of great concern. And as discussed already, inflation rates, which is another big event, globally are spiking everywhere and reaching unprecedented levels. This is impacting especially the poor and the downtrodden in all economies, and sort of the impact in terms of poverty alleviation is that it has set back the progress of hundreds of millions of peoples by almost half a decade. So this is significant in terms of the problems that are going to be surrounding us. And at this point, I would like to now pass on this presentation to my colleague Vanderson, who will now take and delve deep into this trade prices.
Thank you, Prashna. Hello, everyone. So considering the recent events, of course, it's impossible to have a better understanding of trade prices for cementitious products without having a look at the main sea freight rates and container rates, and also having an overview of the energy outlook. Starting with the Baltic Dry Index, which tracks rates for ships carrying bulk commodities, as of July 23rd, settled at 2,002 points, with falling rates for Panamax and Supramax vessels overshadowing gains in the Capesize segment. The Capesize sector saw an increase in the North Atlantic market activity, while the Panamax and Supramax saw losses due to the lack of mineral demand in the Atlantic basin and lower demand in Asia as well. Added to this, we have China's iron ore imports that have declined in the back of the weak demand from the steelmaking industry. And also more recently, we have Germany announcing that they will completely stop buying Russia coal starting as of August 1st, and Russian oil starting as of December 31st. Therefore, making a major shift in their source of energy supply. In the short term, it's expected that the BDI index will increase in early third quarter compared with the second quarter. This will be likely driven by the restocking demand from Europe before the Russia coal imports ban and seasonal recovery in shipments, as well as continued strength in commodity prices. Now, when it comes to the container freight rates, commonly known as the Freight to Baltic Index, we have seen a surge in the past couple of months due to a series of factors. This includes the Russia-Ukraine conflict and also the China zero-COVID strategy, which has declined activities across the whole country, therefore impacting container ships. However, this trend is expected to see a change in the short-term period due to the fact that the global container shipping industry is now being impacted by broader structural factors. This includes a weaker global economy, higher operational costs, geopolitical uncertainty, and imbalanced trade flows. In this next slide, we give you an overview of energy prices evolution to better understand its impact on production costs and transportation as well. As of July 1st, the bunker fuel prices have increased by 1.8% in the Mediterranean basin on a monthly basis, while during the same period, prices have surged by almost 9% in the Persian Gulf and declined by almost 1% in Northern Europe. Sanctions applied to Russia have deeply impacted coal and natural gas prices and trade, as the country is one of the major providers of the commodities to European and Asia countries. Uh, Nevertheless, we have seen coal imports in those regions starting to see an increase in the past couple of weeks as importers across Europe and Asia have secured future shipments of coal from alternative sources. In June, the Newcastle coal price surged to almost 334 per ton, up from 331 in the previous month, while at the beginning of the year, the price was at an average of $148 per ton. Now, when it comes in terms of electricity prices in Europe, we have been seeing a surge since the beginning of the Russia-Ukraine conflict, with multiple industrial producers seeing a hike in their production costs, therefore passing most of the times this cost to the end user, end consumer. Nevertheless, with this increase, we have also seen major economies trying to impose government measures to contain the impact of this skyrocketing energy prices on their consumers. We have, for example, Spain and Portugal, who have received permission from the European Union to use billions of euros in state aid to help ease the burden of spiraling electricity prices as the Russia-Ukraine conflict continues to exacerbate an energy squeeze. Now, we will provide some insights on the current market situation, but of course, our reports include a much more detailed analysis of what is happening and what it is expected to happen in the next quarter. This is both for exports and retail prices. So to begin with, ex-works prices in the second quarter of 2022 are expected to see an increase quarter on quarter, as you can see in the chart, in almost all regions, with the singular exception of China. Chinese cement prices have been declining in the past couple of months due to a downturn in activities in the construction sector that has been caused by the rainy season. So for instance, we have in mid-May, the average price of cement declining by 12% month on month, while the decline has been concentrated in the north, east, central south, and southwest of China. With that, we expect the quarterly basis and exports prices to decline more than 2% in this quarter. Meanwhile, in the Med Basin, Italy and Algeria's exports prices are set to see the biggest increase on a quarterly basis of almost 7 and 3% respectively. This is mostly due to an increase in energy prices in both countries that has been caused by the Russia-Ukraine conflict. In Italy, we have a country where it's highly dependent on imports for electricity and gas, therefore is being severely impacted by the conflict. Meanwhile, in Eastern Europe and CIS, we expect to see the highest increase in terms of exports prices in the second quarter of this year on a quarterly basis at almost 17%. The region continues to be highly impacted by the ongoing conflict between Russia and Ukraine. To give you a brief understanding, Russia is expected to see one of the biggest exports prices increase in the quarter because of the economic sanctions that have been imposed by several countries. In the first 5 months of the year, building materials constructions and costs have increased. In the case of materials costs, they saw an increase of 27% compared to the same period last year. Meanwhile, another country in the region, Kazakhstan, is also expected to see one of the highest increase in terms of exports prices at around 14% quarter on quarter, with the price index in construction surging the past couple of months with a rise of almost 103% on a yearly basis in May. Least but not last, we have Western Europe exports prices that are likely to have a surge of more than 2% quarter on quarter in the second quarter of the year, with almost all markets witnessing price increases due to the rising energy prices. On top of that, we also have scarcity of raw materials and delivery delays that are adding more pressure on cement prices in the region. In this next slide, we are showcasing cement exports prices variation between the second quarter of 2022 and the same period in the previous year. On a yearly basis, exports prices are expected to range from a decrease of almost 16% in the Middle East to an increase of more than 40% in Eastern Europe and CIS. In Russia, again, export prices are estimated to have a robust early increase. The situation has been worsened by the economic sanctions imposed by several economies on Russia, which is having a gigantic impact on the Russian economy. Sanctions have froze a large amount of the country's foreign money, and many companies, including cement companies, have stopped their operations in the country. When it comes to the US, export prices for cement are expected to increase by 9% on a yearly basis in the second quarter. In May alone, the value of construction put in place in the United States increased by 9%, almost 10% compared to the same period last year, while the number of building permits saw a decrease of 7% on a yearly basis. However, increased by 0.2% on a monthly basis in May. When it comes to South America, we see export prices having an increase on a yearly basis in almost all economies, with the biggest increase being in Colombia and Ecuador, followed by Paraguay and Brazil. In the case of the Brazilian cement industry, the cement industry is facing increases in production costs. This is due to the higher oil, gas, and coke prices, which have surged with the Russia-Ukraine conflict, therefore impacting and adding pressure in cement prices, which are expected to see an increase of almost 5% year on year. Now, in order to better understand the trade prices dynamic, and before we actually jump into the trade study, I want to start by providing some country level insights when it comes to cement demand. As you can see here in the chart, cement demand in the select markets have been witnessing a decline year to date in May 2022 in almost all of those select markets, with the exception of Peru. For instance, in Morocco, cement demand decreased year to date by 3.1% in May after a large decline of 5.1% in the previous month. While in Brazil, cement demand had a decline of 2% in the first 5 months of the year, reaching 22.4 million tons of cement being bought, while Pakistan cement sales declined by 6.1% year to date in the same period after a decline of 7%. As I mentioned previously, Peru is one of the few countries that is witnessing an increase in terms of cement demand year to date in May, witnessing a growth of almost 8% after a smaller growth of 7% in April. Other markets that we are also have seen a decrease in terms of demand include Japan and Chile. Now, to provide a context of the global market scenario, we have in this slide a volume analysis of the trade of cementitious products in the first quarter of 2022. Globally, gray cement exports volumes decreased 3% quarter on quarter, while increasing almost 1% year on year. When it comes to gray cement exports, the Med Basin and Asia Pacific Japan were the regions that reported the biggest export volumes during the quarter, with Turkey remaining the largest exporter of gray cement and white cement in the first quarter. In terms of clinker, volumes saw an increase of 16% quarter on quarter, with Vietnam remaining the largest clinker exporter during the first quarter of the year. When it comes to slag volumes, we see Japan remaining the largest slag exporter, with a share of almost 50% of the total exports, followed by India and Germany. Now, in regard to the CW price index for gray cement exports during the first quarter, there was an increase of almost 6%, with Asia Pacific Japan prices increasing at around 4%, while North America and the Caribbean saw the biggest price drop of 3% quarter on quarter. On a yearly basis, the CW price index for gray cement in Eastern Europe rose more than 8%, and the region represented around 8% of the global traded volumes during the quarter. When it comes to the second quarter of this year, the CW price index for the gray cement exports is expected to witness an increase of almost 9% quarter on quarter, with the Med Basin experiencing the largest price increase. Now, when it comes to CW price index for clinker exports, in the first quarter, prices increased almost 8%, with the Med Basin experiencing the largest price increase. And in the second quarter, we expect the price to have an increase of 3%, with both Med Basin and Eastern Europe estimated to have the highest price increase in the quarter. Lastly, when it comes to white cement, the CW price index for white cement export, during this quarter, price cement increased by more than 4%. In terms of volumes, there was a decline of 13% quarter on quarter. And in the second quarter of 2022, we expect prices to witness an increase of around 4%. This price increase is attributed to the ever-increasing inflation rates, which added to the sharp increase in electricity, coal, and natural gas prices, are likely to impact production cost and transportation as well. In this next slide, we have a heat map, a map where we see the regional CW price variation between what we forecast for the third quarter of 2022 and what we estimated for the second quarter. As you can see, all regions are seeing price increases at different levels. Globally, we have a price increase as a result of production and transportation costs, which have been aggravated by geopolitical conflicts and the pandemic. Eastern Europe and CIS is expected to see the biggest price increase, as it is concentrated in the geopolitical conflict between Russia and Ukraine. And the region is going to be followed by the Middle East and the Med Basin. When it comes to North America, we have seen prices increase in the second quarter, and they are expected to reach more than $111 per ton in the third quarter, followed by Sub-Saharan Africa, in which the price index for gray cement exports is expected to reach around $89 per ton in the third quarter. Now, to finalize our presentation, I would like to leave you with our closing remarks. Please note that this presentation is focused on the highlights of this update, and you can find much more detailed information in our report. Turkey continues to be the largest exporter of gray and white cement in the first quarter of 2022. Vietnam continues to be the largest exporter of clinker, and Japan remained the largest exporter of slag in the same period. In the second quarter of the year, on a yearly basis, export prices are set to see an increase in almost all markets, with Eastern Europe and CIS and China seeing the biggest increase in terms of prices. And when it comes to the CW price indices for cementitious products, including gray cement, clinker, slag, and white, we are expected to see increasing indices with various levels. In terms of the CW price index for gray cement exports, we have Eastern Europe and CIS and the Middle East expected to see the biggest increase when it comes to the third quarter of 2022. To finalize, I'd like to thank you for your time and attention. Please don't hesitate to contact us so we can help you. I'll leave here our detailed contact in the last page of the presentation, and we'll see you in our next webinar.